A lot of setups can lead to high probability trades, and then one of the best is wedge. So on this chart, you can see that the market is going down here. Do you see a wedge? These are the lows, and these are the highs. If I connect them together, I can see the trend line connect together in the end. This means the market moves and then it slows down, so both the buyers and the sellers, they are taking a pause. So this means later on, the market has to break into either direction, either up or down. Why the market will break either up or down? That is because the trading is in cycles. That means the previous cycle kind of ends already. So that means a new cycle will start. And then start with the breaking out. That's the best trading opportunity. There are other setups like the channels up or down, or even open triangle, or even the single trend line without the other side of the trend line. But why wedge setup is the best for the high probability trade? That is because when you see the market, it goes to the corner here. So it has to break out either up or down. On the contrary, for open triangle, for channels, they have other probabilities to go to a bigger range. That's why it's not necessary that the other setups will lead to a breakout. Then where is the high probability trade? So when the market breaks down here, it's a breakout. We wait for the pullback. We have to wait for the pullback. Because if you trade when it's breaking down, you don't know whether the pullback will be up here or up here, sometimes even could be here. So that's why you want to wait for the pullback to be finished and enter the market. That's the best timing. And then when the market goes down, when you see this bear bar, that's the start of the second leg, then you enter. And most of the time, the wedge breakout will give you both scalping and swing trading opportunities. One thing to notice is that the clearer this setup, the better trading opportunities. For this wedge setup, it can break out to the upside or downside. It really doesn't matter. And sometimes this wedge will pointing downward, or sometimes it's pointing upward. If it is pointing downward, when it break out to the upside, the higher probability is gonna be a huge trend, vice versa. So it can go either directions. Second, we need to wait for the pullback, like I previously mentioned. If you don't wait for the pullback, you may have a very bad timing in entering the trade. So you won't get the maximum profit. The third is, a lot of times it will have the third leg down, so it's a swing trading opportunity. So keep part of your position for a swing until the end of the trend to make more profit. And then last, this shape for day trading traders, it is for the whole day chart. If you're trading on a very small scale, like a 1 minute chart, for the hour, it's not as powerful as when it is for the whole day chart.